the way you look at the crypto market should actually adapt to understand the microstructure with respect to the macro structure. If something has happened once, okay, you can neglect that. But if that's repeating in itself in the same cycle, there is a lot of possibilities that the results can also be similar. At least take the average, if not the total movement. Now, the argument which you may actually have to understand is the macro market is the driving factor for this market condition. When I say that, yes, I'm using gold. Yes, I'm showing you the pattern because remember, we discussed about this scenario before. And right now we are watching gold in itself is doing that. So the SI family was already on top of this with a lot more happening in the market, whether it's the short term, macro, micro, they are updated with everything happening in the market. And that's one of the reasons why when you do look through things, some people are confused, some are not, because they already got educated about the odds in the market. The weekly candle close gives you that narrative clearly. Bitcoin closed in green, which is bullish. XRP closed in green, but Ether was in red. So what are you really looking at? Because the altcoin market, now we are keeping the Ether outside, is showing you that itself closed in green. So there is a money flow happening in front of us. Welcome to the scientific investor family, where the normal retail guys get to learn how to become the next top 10 person of this world. We go through a lot of these assets, breaking through the structure, the price, the breakout, the targets, what you should be expecting in the near future. And right now you're watching some of them are slowly starting to play out. The market is starting to get the liquidity back, which is positive because the way you look at this is it's not only big guys buying more and more and more, but it's also those who were selling before starting to change the direction. So now there is something happening. They've been selling it. Now they're starting to buy it back. And when they were selling it, mostly the price literally went up to what, 74. So they sold a lot near 70 to 74 range. And now that the price is below 64, they were starting to buy it. Slowly the price is pushing back higher. What can we understand from this? There's something we have to ask ourselves. Now, this is a weekly structure showing you a hammer. And that hammer shows you it came down to the weekly average, moving average, and bounced back up, which is positive. Now, if you slowly zoom in, you want to see, okay, what the hell is happening here? Because this structure was one of the concerning things which we had, or which we still have. This is that range, which was a support, which then broke to the downside, retested, and got rejected. Now, here we are. We don't have a divergence yet, so we are purely looking at the price action in itself. The price action shows you the last 3-day candle. When it closed with a bullish engulfing candle, and that's actually perfect. At least with that candle close, it argues with a lot of selling volume. Yes, sellers were able to push the price down. That was a big candle to the downside. But now, with a little bit compared to the last candle of buying volume here, push the price through to erase all of that which happened with this volume. That looks bullish for me on a 3-day chart. So we now got the weekly, that looks bullish. We now got the 3-day, that looks bullish. We're now going on to the daily. Fine. The daily chart kind of shows you it closed here. So the buying volume was reducing. Similarly, the buying pressure to the upside was also reducing. Now, one thing to note here is the fact that you reduce the volatility. That's completely fine. But then you plot it, you see that's a breakout. Some people don't believe in lines because if you use candles, you have a lot of noise in the market. It is hard to see that. But this way, it's easier. It makes things a little bit more clearer for us. Now, here we are. We're breaking this pattern for which the measured move the market gives you is like 12.5, 13%. Say, we'll take 12. That actually brings you all the way back up to $71,000, $72,000. Now, we also understand the fact that we do have another resistance level coming close to that. So that now is a valid range with other structures being invalidated. So you had this macro, which was invalidated. You had this level of support, which was acting as a strong support for some period of time. We enjoyed that support. Now we have a fake out. It's coming back up. And this structure, if it's going to do that and bounce, perfect. I'm okay with that. Why? The strength index is clearly showing you the price to the structure or the strength is agreeing in itself. So you're taking it all the way from here and bringing it to the downside, and you see there is a clear breakout. Now that's the story on a daily. So now you're watching this and saying, okay, the weekly, the 3-day, the daily, all of them agrees that the price is pushing to the upside and we have a clear breakout for which first resistance range should be somewhere close to 69,300 to 70, say 69,500 range. That's your first primary resistance. But the measured move end up to be 71. So if you do reach that measured move in this week, by the time this weekly candle closes, that is going to flush a lot of sellers on the other side, which would push the upside even further. Now, why do I say that? Because when we go on the monthly, to reach that level of bullishness, because what we discussed is a weekly, 3-day, and daily. On the monthly, we still have a red month, which was an engulfing candle. That's not good. So you need to erase that. If not, you're still bearish. If not, you're still bearish, whatever anyone says, right? So if you're not able to break this candle in next 1 or 2 weekly candles to the max, it shows you huge selling pressure. But yes, that's the red flag, the cautious part we have to look when we reach the weekly close and then the monthly close. Fine. However, if you do reach that first measured move of 71,000, now just in 2 weeks, you may actually raise this. So the monthly may actually go above 73 and close if we do that. Now again, it's that if, right? If we do that, it's fine. So with the same scenario, what are we watching here in the terms of XRP, in terms of the market, the move? We need to see the moving average being broken and made as a support. Right now, the price is below it. It doesn't act as a support. It acts as a resistance. If you do go back up, then it starts acting as a support. That's what we want to see. Fine. So that's on a weekly. Now you start zooming in on XRP. You go on to a 3-day chart. This is positive. You now see that the price is trying to make something like this. Now we have seen this move, these kind of moves in XRP, similar kind of pattern structure, which shows you a higher low is getting confirmed, which usually try to push the price towards a higher high. Now, for us to see a higher high in XRP, what should be the price which we should look at? The breakout here is valid. The measured move there is valid, but I didn't mean it's breaking higher now. I mean, if we do break higher here, that's valid. The measured move of 30% is valid. But what should be the level where you get the certainty that, yeah, this asset is going to now start rolling? That should be about 0.75. That's the first key range which we've been, acting, getting resisted, rejected again and again. Now the next level is going to be 0.86 and then like 0.9. So you do have multiple overhead resistance to play and break in XRP terms. Fine. Now we go on to the Ether side of things. Like, okay, this is the monthly candle. That doesn't look bullish. Fine. That's a corrective move coming in. But it's a corrective move coming in a new trend. But if you do look at the momentum side of this, that is where I get a little bit concerned. This drop to the downside has been heavy. The move to the upside has been muted compared to the downside. The time taken to come to this downside and the time taken to come back up to test this range shows you the fact that sellers were really strong back then, not now, back then. Compared to the buyers back in these days, it was just boom, right? Even in 2021, from one point, it looked like that. Now, we haven't reached that phase yet. So that means you still need to get a breakout, which is that level of breakout we should be looking at. For Ether, if you do plot it, it's clear. This is what you're looking at. If you do get a breakout of 3388 or say 3400, that's good. The next range is 4,000. The moment you get a break of $4,000 in Ether, that's kind of a confirmation for you. It's going to go higher. The momentum side of it should increase. This is something you should be looking at. Now, if you are someone who loves the altcoins, now we are looking at multiple factors in the altcoins. One of which is, are we getting a reversal? And I would argue, yes, we are. We are watching few of these assets trying to do good. We are watching some of them doing extremely good. And this is where we are. We came back down to that level of support. And now that support is acting as a strong support because we are not breaking to the downside. We are trying to make a double bottom. But is it confirmed yet? No. Agreed. Until you see this level being broken, it's not. This is a perfect scenario. If you do that, that's the textbook pattern which you would want to see. But as of now, this is what you're looking at. So in the altcoin market, this pattern, this structure is valid. Now we have seen something similar previously, so it's nothing new for those who are riding crypto. This is going to be an opportunity because the RSI was already showing you a breakout, a retest, and a bounce. So I'm expecting this to break to the upside and continue to the upside. This is going to give you more in terms of the ROI structure, even in XRP, because that's the market, general market sentiment turning bullish after going through this downside all the way from like mid-March to this point in early May. So if you see this price breaking through, going through this range, for XRP, it's 0.73, 0.74, the key range to break. If you do see that being broken, that's a lot more confidence for those who are bullish on this payment segment that, yeah, the market is showing you a lot. Now, we did a comparison earlier, like, we went through a lot of different assets together so that you guys understand what the market shows, what the payment market shows, what the smart contract shows, where the AI is, what the meme coins are, because when the price starts to bounce, people usually jump onto the memes because they're watching something going up. They want to grab that green candle. So you want to understand where you do that or where you shouldn't do that. These are two phases of the market cycle. In that earlier phase where you're breaking through the accumulation, go for it. Just not levered, spot. Go for it. It's okay. If that's what you want, it's completely fine. You'll still be alive in the market and you can still ride. But if that asset is already in the markup near the wave 3, that's the level of risk you're taking to catch that green candle. On a weekly, it shouldn't be looking good. It would be super high risk. So make sure you understand what the market is showing you. Make sure you're looking at the structure correctly. And that's the benefit of being in the SI family. So if you want to join 1,000+ members there, you can use the link in the description below in YouTube or in the bio on Twitter. So guys, if you received value, smash that like button for me. I appreciate that a lot. I'll meet you guys on the next video. Bye for now.